Hello and welcome to the look ahead for Friday, the 23rd of August, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching out for inflation data from Japan. Bank of Japan Governor Ueda will also be speaking. European session is relatively quiet. Over in the US session, there'll be Canadian retail sales, but the main focus will be on the Jackson Hole Economic Symposium, where we've got Federal Reserve Chair Jerome Powell speaking, as well as Bank of England Governor Andrew Bailey. So just to focus on what we'll be expecting from Federal Reserve Chair Jerome Powell, and he's basically coming and speaking at the Economic Symposium to a backdrop of expectations of rate cuts for the US from the Federal Reserve starting in September. The minutes from the FOMC, which were released yesterday for the August meeting, as good as confirmed that the Fed is ready to cut rates next month. And we also had that downward revision in the US payrolls. So payrolls were downwardly revised by a chunky 818,000 for the year ending, for the 12 months to the year ending March 2024. That tells us that actually the US jobs market is considerably weaker than what was initially reported. So I think what we're seeing now is this change of focus from US inflation, where the Federal Reserve are getting quite comfortable that inflation is cooling towards the 2% target, and the focus really onto the employment component of their dual mandate. Now, at the moment, the market is pricing in around 1% worth of rate cuts between now and the end of the year, which I think is probably a little bit overdone. And we're actually seeing Treasury yields rise slightly today, as we've seen sort of a slight unwinding of those expectations. I think, we do expect the Federal Reserve to cut interest rates. But I think Federal Reserve Chair Jerome Powell is going to really focus on the fact that the Fed is planning to adopt a slow and methodical approach to rate cuts. So there might be a little bit of disappointment in there for those that are expecting some fireworks from Powell with large rate cuts. I don't think that's going to be the case. But anyway, let's take a look at the chart that we've got here. This is US dollar, Japanese yen. Obviously, this chart has been very much in focus over the past month or so, given the big moves that we've seen. And if we just have a look here, if we do find that we hear a more dovish sounding Powell and a more hawkish sounding Ueda, and obviously inflation in Japan is expected to tick higher, core inflation is expected to rise, and that would give the Bank of Japan more headroom to hike rates further. So, that sort of potential of further interest rate hikes in the from the Bank of Japan is going to be offering support to the yen, whilst we've got this idea of rate cuts for the US dollar, which has put pressure on the greenback. Now, if we do, as I said, get sort of, a hawkish sounding Ueda against a dovish sounding Powell, and we could see this pair drop lower. 145 is the round number, the line in the sand at the moment. If we get a drop below there, then obviously that's going to open the door once again to that 70 level, which was the August 5th low. If we do get sort of a more or less dovish than expected sounding Fed Powell, then we could see actually a little bit more strengthening in the US dollar. As I said, we have seen the US dollar push higher today as it tracks those yields a little bit northwards. On the upside, the levels to be watching there immediately is the 23.6% fib of this swing high to the low there, and that's around the 146.50 level just here, very close resistance. But this is going to be the key one here. I think 149.40. That is the high that we saw on Friday. It's also this week's high. It's also, not only is it the 38.2% fib level, but it's also the rising trend line resistance. This is a trend line that actually dates back to, I think it's all the way back to 2022. So that's quite a key resistance level as well. So if we do get a rise above that, I think that would be significant. But I actually don't think that's the base case scenario. I think that could continue to be offering resistance around that level. Other things to be watching out for. Let's just take a quick look at the S&P 500 and how that's behaving with regards to these recent rate cut expectations. Obviously, we've seen this really strong recovery from that August 5th low. That's obviously when those recession fears really pushed higher. But look, we're struggling just around this level, just 1% below that all-time high. And that's, again, just seeing this repricing of perhaps what to expect from Fed Chair Powell tomorrow, as the market just got a little bit carried away with it itself as far as rate cuts are concerned. That said, obviously, we did get that big chunky downward revision in payroll. So I think what that also tells us is there's going to be so much focus on the August non-farm payroll report, because this focus now is shifted from inflation really to employment. And so that means that we'll get a really potential volatility. And that's what I think it's the 6th of September that's going to be released. But yeah, so if we're finding that the Powell is trying to rein in a little bit rate cut expectations, we might see a little bit of a move lower on the S&P 500. But still, this level around here, 5,500, that could offer some support. That is the high that we saw in June, and it's also this rising trend line that's in play, and that has been in play since the end of November last year. On the upside, as I say, more sort of dovish sounding. If the market is encouraged by the Fed's commentary, then we could see a break above the 56.70 to fresh all-time highs. We have to have a look at gold whilst we're talking about the Fed, Powell, and what's going on there. And look, we're just seeing that gold actually fall lower. It was attempting to break out of this rising channel that it's been in since early April, rose to a peak, that all-time high that we saw of 2,530. That was on Tuesday. Has since fallen lower. Again, what can be seen as a natural correction here as well. There's nothing ominous about what's happening. It's just reached that high level, attempt to break out and ease back into the rising channel. Just testing this immediate support here, which is at the 2480 level. That's the July high. Below there, we've got this support here, which is the 2,450 as well. So again, if we're seeing Powell rein in those rate cut expectations a little bit, and a repricing of perhaps what the Fed is going to be doing this year, then we could see those gold prices just ease a bit lower. On the upside, watch out for a rise above the 2,530. That's going to bring this trend line into play. Again, this is a trend line which has been around since 2022, I think it goes back to as well. So that would mean that the upside will be looking at around the 22,575 level. And just finally, let's take a look at the pound US dollar. As I said, Andrew Bailey is also speaking tomorrow. Now, the pound has been one of the currencies that has really benefited from the weakness in the dollar as well. We've seen that it's trading again in this rising channel. It's attempted to break above this level here, which is the 31. This level here, that's the next high that we've got, 31.57, 31.57, somewhere like that. That's the high that we saw back in July 2023. So that was the level that we've run into resistance at as well. I think, as far as the pound is concerned, it has benefited from the fact that the Bank of England is unlikely to cut interest rates again in September, given that they cut rates in the latest meeting. And also, just had that stronger than expected PMI data from the UK as well, which has been supportive of the pound, particularly against the dollar, where we've seen the market get, as I said, overexcited potentially about how much the Fed will be cutting rates. So I think, that there is a possibility for the pound to move higher here. But it really depends on how much I think Andrew Bailey sort of really fuels expectations of further rate cuts. I think the market at the moment is fully pricing in the next rate cut in September. Sorry, not in September, in November. So, you know, if we do get if we get some dovish commentary from Andrew Bailey, particularly surrounding wage growth and services, then we might find that the pound does struggle to move much higher. And yeah, that's the pound. Just as far as levels are concerned, as I said, you know, that's the level on the upside, the 131.30, 131.40 level. Above there, they'll be looking at the rising trend line, which is around the 131.80, and then you've got the 132 round number. Support is concerned, I think, around 130. Yeah, 130 is going to be a number on the downside to be watching. And then below there, 128.90. That's this high here that we saw in March. So anyway, I hope you like what you've seen. If you do, then please do give this video a like. And if you'd like to receive more videos like it, then please do subscribe.